Hello, my name is Braun. I'm the managing director of Zenon Partners. I have produced 3 short videos about how foreign companies are losing control over their investments in China and the risk of financial meltdown there, and also what foreign investors can do to mitigate that risk. I hope you enjoy the content.
I've been living in Shanghai for 8 years now. Since the pandemic started in recent years, I noticed that there are way less Westerners living in Shanghai. What's going on?
What's going on? There's what we call an exodus.
They all flee China?
No, they don't flee, but the conditions have changed. And the discussion around foreign is always very emotionally charged by some people.
Yeah.
It's not about moralization. It's not helpful and has nothing to do with it. People go where they find the best job opportunities.
Yeah, they go where the money is.
They go where the money is. And so actually...
So the money is not in China anymore.
It's really depressing.
One of the changing conditions.
We will have a separate video, as you know, about profitability of foreign invested companies.
Yeah.
And you indicate, oops, there's something going on.
Yeah.
But also things change. I was a student in the 90s. You could buy a big bottle
in the 90s in China, in Tongji University.
At the Tongji. We bought a bottle of the big bottle of Qingdao beer for, I forgot how cheap it was. I think it was a renminbi or so. It was amazing.
1 renminbi for
2 renminbi, for a big bottle of beer.
A big bottle of Qingdao beer. Wow.
So you can imagine we enjoyed studying here.
Back in the 90s, Westerners were flopping into Shanghai for cheap beer. But now they're flopping away.
In the early 2000s. 2002, 2010 was like boom years for China. When you look at the GDP rates, China was the fastest growing economy in the world.
Mm-hmm.
And it's now the second largest. That meant new markets, new products. When you have such a demand, after China opened, there was more demand than there was a supply. And so the profit margins were large. There was money for everyone to make. Yeah. Companies could afford to send their engineers, the GMs, to China with very
expert packages.
And some of these expert packages were silly, no doubt about it. So absolutely silly. But nobody cared at that time.
Yeah.
And Shanghai was, by Western standards, and cheap. You could find a very nice apartment for a price that was a fraction of what people would have paid in Frankfurt or New York.
Okay.
That has changed.
Yeah.
Shanghai, which is the main location for Westerners, or Beijing, is very expensive.
Nowadays.
Yes.
Okay.
There's a company called Mercer. It's like an HR consulting firm. They publish a report every year.
Yeah.
The most expensive cities for expats. Of course, it's from an expert perspective. And most of these cities are either Swiss or in Asia. Singapore is on that list.
Yeah.
Shanghai is on that list.
Yeah. Hong Kong.
Top 10. I think Hong Kong is, Beijing is.
Yeah.
There are many reasons. We don't need to go into that. But so profit margins for foreign players went down because it's now a mature economy.
Yeah.
Also, so they critically state-owned enterprises with the support of the government have an ever-growing space in the Chinese economy, not because they are better, but because it is wanted. So they push away the private companies, and many of them, the local private companies, but also the private companies that come from overseas.
Okay.
So their profit margins are declining. Costs are going up.
Yeah.
So it's very simple. Foreign employees, managers go where they make money and not where costs are high, where standards of living is less of what they have at home. It's a matter of incentives. And this trend of rising costs, lower business or fewer business opportunities has caused many Western executives, let's call them Western executives, whether they're expat with a ridiculous package or just local content but well paid, and now make the decision, should I return home or go to another market? I have now many friends, they love Asia, they like it here, and so they go now to Vietnam.
Okay, where the cost of living is way lower than Shanghai.
Cost of living, there's always a balance. If you go to Switzerland, it's a very successful economy. It's also very expensive,
Yeah,
but it has very well regulated markets,
yeah,
capital markets, financial markets, labor markets. It's a successful economy, job opportunities,
Yeah.
return for investors.
yeah.
So they are not short of foreign experts willing to work there.
Yeah.
China, a highly regulated economy now, more than it was 10 years ago.
Regulator versus competitiveness.
I would say central planning rather than market driven.
Okay.
And in 2010, this was less. It was less. I would say there were more markets operating here and more opportunities. But now sometimes there are restrictions. China has become a very protectionist country, by the way, like Japan, like South Korea. It's not only China, but China has become a very protectionist country, meaning local companies are favored, so all kinds of regulation.
Yeah.
And that means for foreign invested companies, the return opportunities, the profit opportunities
Yeah.
to do business that's worth it.
Or so you're saying that Shanghai or China in general used to be a freer market versus more regulated like
Yes.
today. And the cost of living was relatively low compared to the big packages Westerners were receiving. And for headquarters, it was such a profitable market that they really wanted, to have a strong team here. However, today things have changed.
Let's talk about strong team. I think what's very important is to understand why would you want to have a foreign national or someone from headquarters anyway?